Most people think the world's money is controlled by the big banks you see every day. But right now, there's a $3.5 trillion financial system operating in the shadows. No branches, no ATMs, no public transparency. It's called private credit, and for years it's been a goldmine for billionaires. Double-digit returns, minimal regulation, and easy money flowing everywhere. But in early 2026, something changed. A $3.7 billion withdrawal wave hit one of the world's largest private credit funds, and suddenly, the system started to crack. This is the story of the shadow bank, and why it could trigger the next global financial shift after the 2008 financial crisis. Governments tightened the rules. Banks could no longer lend freely, especially to risky businesses. But the demand for money didn't disappear. It just moved off the grid. Instead of banks, private investment firms stepped in. Firms like Blackstone, Apollo, and Blue Owl began lending directly to companies, negotiating deals behind closed doors. This became known as the shadow banking system. And investors loved it, because while banks offered low returns, private credit delivered 8% to 14% annually. Quietly, this market exploded into a multi-trillion-dollar giant. But every gold rush has a breaking point. In early 2026, the first warning signs appeared. Blackstone's flagship fund, BCRED, was hit with $3.7 billion in withdrawal requests. That's nearly 8% of the entire fund in a very short time. They managed to survive, but only by using internal capital to meet withdrawals. Others weren't so lucky. Blue Owl faced even higher pressure, forcing them to lock investors in and stop withdrawals completely. And this exposes a dangerous flaw: liquidity mismatch. These firms lend money for 5 to 10 years, but investors can demand cash back instantly, and you can't sell long-term loans overnight without taking massive losses. Now here's the part most people don't understand. In the stock market, prices update every second. But in private credit, prices are often estimated. Critics say these firms are essentially marking their own homework. They decide what their loans are worth, not the market. And that creates a dangerous illusion of stability. Because when losses finally appear, they don't come slowly. They come all at once. As JP Morgan CEO Jamie Dimon warns, when you see one cockroach, there are never just one. Recent defaults are already emerging, and some analysts warn default rates could spike as high as 15%. And now, global pressure is making everything worse. Rising geopolitical tensions have pushed oil prices higher, fueling inflation worldwide. Central banks, especially the Federal Reserve, are keeping interest rates elevated. And this creates a hidden chain reaction. And now, global pressure is making everything worse. Rising geopolitical tensions have pushed oil prices higher, fueling inflation worldwide. Central banks, especially the Federal Reserve, are keeping interest rates elevated, and this creates a hidden chain reaction. Banks lend money to private credit firms. Those firms lend to businesses. And every rate increase gets passed down the chain. The result? Businesses are now drowning in interest payments. Profit margins shrink. Debt becomes harder to service, and defaults begin to rise. Banks lend money to private credit firms. Those firms lend to businesses, and every rate increase gets passed down the chain. The result? Businesses are now drowning in interest payments. This isn't just a problem for billionaires. Over the last decade, major firms have quietly used pensions, insurance funds, and retirement savings to fuel this market. Your money could already be exposed, hidden under labels like alternative assets or multi-strategy funds. And as billions of dollars in loans come up for refinancing in 2026, the real strength of this system will be tested. The era of easy money is over. What comes next is selection. So pay attention, because in the shadow banking world, the biggest risk is what you don't even know you own. Subscribe to Wealth Explained and start building real wealth.